Hey traders, welcome to another YouTube live here. So this video we're going to be going over BTC, but going over even from the monthly all the way down to the hourly, really breaking it down with that top-down analysis. And we're going to start it right off here and talk about the monthly. So we've identified some key resistance and support areas within the previous market structure before the bull run commencing in 2016, following through all the way until the end of 2017. We will talk about how the correction and impulse move is occurring, or it seems like is occurring, and then what we could potentially see in the near future. We have two price action patterns here, where one is going to be an ascending triangle, where the other one is going to be a descending channel, where both are going to be continuation patterns to the upside. We see this current 2016 in May-ish and June had a pullback, validating the previous level of resistance as a new level of support. And then we'll get our snip and discuss this in pretty good detail here. So let's initially get our snip. So this is back in middle of 2013 to basically the breakout which occurred in the Q3 of 2016-ish. So then we had our descending zone, which we can see right here. And we can also see that within 2018 as well, where we have a descending zone. It's not perfect here. We could probably put an anchor point at this point, but you get the gist of the descending zone making lower highs with the bearish momentum to the downside. And then we see the price hold a zone where it's not able to make a lower low. We see these lows here. This is a low. This is a lower low. We see a low here. This is a lower low, and this is a lower low. But when the price is able to get supported and not make a lower low, then we are looking to potentially see a reversal, especially when it's in confluence with the price breaking our descending trend line, which is going to be the shift in trend. Like we can see right here, we had a push to the upside, a pullback, and a candle closed perfectly at the previously broken level of resistance, which will turn into a new level of support. So this is a validation of that zone, and a validation that there is going to be demand at this zone because it's validating it as a level of support. The next candle we see, it might be a little bit difficult to see, is going to be a bullish doji, which is a shift in trend, and it is going to then come with a huge bullish move to the upside, which will then initiate the momentum to start our ascending triangle, where we have the resistance right here, pushing the price or holding the price below a key level within the chart. It looks like around $420, and then we see the price make higher lows, squeezing the price towards the apex of the price action pattern, which is right there. And then the price has to make a decision. What does it have to do? It has to go either to the downside or has to go to the upside. But as the price continues to go towards the apex, it gets bought up, and we see increasing buy volume push the price up to our next key level of supply. We can see previous level of support, previous level of resistance, and then we get a little bit of a bearish candle. It did close green, but the retracement from the high of where the candle was all the way to about half underneath the key level of resistance is a little bit bearish. And then we got two little bearish candles there with a pullback. The second bearish candle was a hammer candle where the bulls bought the price back all the way up. So if this was the candle, the wick is significantly larger than the body of the candle, which we can see right here, which is signifying that there is bullish pressure within the market. Even more bullish pressure would be if this candle closed green, but it closed red, but there was not a lot of volume that came into the market in terms of sell pressure. But it was a good retest of the zone of confluence, because initially it was the previous resistance turning into a new support, and it was also the ascending curve support that we've been talking about for a while on the BLX chart. So that's a key nice push, pullback, and then a push again to continue the move and break the previous level of resistance, which will turn inevitably into a new level of support, and then the bullish moves continue. So How does it relate to this? Current price action? Well, it's actually very, very similar. So I'll go through it exactly. We have a descending zone. We have a descending zone. We see a break. We see a break. We are looking for a continuation pattern to the upside. This could be wedges, channels, triangles, symmetrical triangles, ascending triangles, descending. There are different price action patterns, even just sideways channels, consolidation areas, reverse head and shoulders. If it's going like this, and then it'll go like that, and then maybe it'll get a pullback, and then it goes, and then this is your breakout point. But there are many ways in order to potentially capture profits to go to the upside, and you see two very clear ones on this chart. We see initially in the first bullish push that we're analyzing, we have an ascending triangle, which is like this, and the price is respecting higher lows and holding below a horizontal resistance, and the price is squeezing towards a apex, which is going to be basically the funnel of the price in the volume. So it has to pick a direction. It can't just it will continue to go to this way, but then it's picking a direction to break the ascending support. So definitely the dependability is there in terms of price action. So we definitely like to use that price action pattern within our methods. So that was right here. We see the higher lows and the horizontal resistance, and then it breaks out, pulls back because of the previous level of resistance here, new previous level of support as well, and then it pushes, pulls back, validates it as a new level of support because it was a previous resistance, and then it pushes, holds that previous level of resistance, new level of support, and then it basically has a parabolic move to the upside. So I can't say it is easily understandable, but there are definitely patterns on the monthly chart that signify that we could see a bullish move towards the upside pretty soon, because this is our consolidation pattern. It's just basically a descending channel where you have a horizontal we have a descending resistance and a descending support, and the price is respecting that pretty clearly here with very small bearish candles closing a little bit lower than the open each time, with a little bit of a green candle there with the bullish move that occurred that pushed the price up 40%. And then we got a strong bullish engulfing candle here, and we've been basically in a bullish trend since, after breaking this consolidation, this descending consolidation, which is basically similar to our ascending trend line or ascending triangle. And then we got to push a exhaustion phase to retest the previous resistance as a new level of support, and then we start our trend to the upside. So overall, I do think we could potentially see a pullback. That's why I'm thinking that around this 12K-ish range could be a level of resistance, and then we see a pullback to then validate potentially this green ascending curved support as a new level of support again after we got squeezed in from this price action pattern. That could be a possibility. Obviously, we don't exactly know. If it does continue towards the upside, that's great. Right now, just even looking at the hour chart, it does look pretty bullish. We just broke new highs above the 98.50-ish mark, and then we've retested as a new level of support on the 1 hour, and right now we're getting our first injection of buy volume coming in, reassuring us that there is bullish pressure within the market. So it's looking pretty good. We'll cover that later in the video, but right now, let's just complete the monthly analysis. So it's basically complete. It looks very strong. We'll talk about it on the weekly, but that is the overall macro picture that I'm personally able to see for BTC. It's very simple. It's clean. It is to the point. We have clear identifications of the setup failing if it does actually break our, for example, green ascending curve support. That would be a failure in our system, in our view of the market, and we would have to reassess. But as long as the price is following what we are projecting our bias onto the chart, in a sense, we will be able to just continue with how we're trading and continue with our analysis and bias in the market. So that is the monthly chart, and we're basically going to stick by it unless something happens. We're not going to hold a bias. We're not going to marry a bias. If something occurs, we'll shift it, but as long as it's continuing with what we are looking for within the market, then we will just continue onwards. So talking about the weekly now, we can see that the price is, let's get this here. We can see that the price is breaking above our mid-range zone. We don't have a closed candle yet, but it is Saturday, so we will have one shortly. So let's just zoom out here and talk about our key zones that we have. Let's just zoom in right there and then get our snip and discuss our supply zone, our demand zone, and then our mid-range zone that we currently are sitting just above. So our supply zone is going to be around $11,500 to $12,000, which is right here. We can see it's a key level of resistance as well as support. Not perfect, but we do see candle closures right here. This wick didn't really close perfectly on it, but every exchange is a little bit different. But this 12K, 11.5 is definitely going to be our supply zone that we're looking to potentially see a bounce. Remember that we were holding potentially a horizontal supply zone, and then we see this curved support come here, and we were thinking that we were going to have another bounce off the zone, and this is that curved zone we can see. So potentially, if that is the supply zone, we could see resistance at this zone and then come back for a second or even third time if we do actually create this price action pattern, which would be pretty ideal because then we know exactly when it's going to break to the upside, because we'd be looking at this zone as a breakout area, and then if we are able to hold above it, that's great. If we're able to get a retest to validate it as a new level of support, even better. But overall, we're looking bullish. It's looking very strong. We don't see a tremendous amount of buy volume come into the market. There is more buy volume compared to the sell volume, which is volume accumulation, which is great to see. But just comparing it to what we saw at the first start of 2019, it does look a little bit weaker, although we are still early within the potential move of the bullish push. Well, mind you, this could completely break and we could just see a move straight above. Obviously, we don't exactly know, but just looking at the overall picture with how things have gone in the past on the monthly chart, we can speculate that there could be a potential for another ascending triangle, squeezing the price from a horizontal zone right here, squeezing the price with an ascending support right here that is basically creating an ascending triangle, which then apex is right here, has to make a decision. There's a higher probability of breaking to the upside because like we've seen time and time again, Bitcoin breaks resistances and holds supports in the long term. Obviously, in bear markets, we broke a key level of resistance at the 6K mark, but that was needed to, I guess, correct itself back to where the green ascending support is. But that's definitely in bear markets, and if you're looking at bull markets, they are a completely different beast in terms of how you capitalize them, because the bull markets are, there's like different segments of bull markets that create a single bull market in a sense, and we'll talk about that not in this video, but we'll get into it in other videos. So now talking about the daily chart, because we've already discussed exactly what's happening, we do like to see that the weekly is almost closed now above our key level. We can see very, very clearly that this level has been a strong level of support back in 2019, as well as a strong level of resistance when we had that bullish move from around the $7,200 zone all the way up to the 10.3. We did close around the 9.6, really validating and solidifying the strong level of resistance we have from that previous level of support. So now going to the daily chart, initially the CME Futures Exchange. This is the Chicago Mercantile Exchange. We have the initial price. So let's just talk about this first. This is how institutional investors and traders are using Bitcoin to trade and using that as a vehicle to find volatility, basically. And there is BACT as well as CME, but unfortunately we do not have BACT's information and data on TradingView, so we only have left with the CME futures, but then we also analyze different exchanges within the cryptocurrency exchanges that we have, and those are 24 hours, 7 days a week, 365, whereas the CME futures and the BACT are limited in time. There are going to be gaps, and we play those gaps, and we get into that pretty extensively in the Performante Premium subscription service. So moving forward, let's just talk about what we see on the CME Futures Exchange. Let's get our snip here. So we were making some nice levels here. Previous level of resistance, new level of support, previous level of resistance, new level of support. We did miss a little bit of a gap here, but if we just connect the wick low right here to the wick high of the previous high, the gap is non-existent. There is no gap there. So if we just move this line up to here, there's basically no gap there. And then we've been making very clear higher highs and higher lows, breaking resistances, holding supports, seeing significant bullish volume compared to the bearish volume. Overall, we did see quite a bit of bearish volume within this candle for the pullback, so that was a little bit worrying because this was such a key zone of confluence, and we were definitely long here. Oh, excuse me. And we saw that bearish volume come in, which was a little bit it didn't make us nervous, but it was definitely surprising seeing the bullish volume coming in and seeing that big bearish volume. But overall, we do see the bulls still have confidence, conviction, and strength. They are able to hold that price above the previous resistance, which we can see has been a strong zone throughout the 2019 chart. It's from $9,600 to $9,460-ish. We can see very, very strong, dependable level throughout all of 2019, all here. And then that was where we cracked and fell right down below. We retested, validating that zone very, very significantly right here. And then now we've basically broken above that zone with ease. And we have strong buy volume still coming in. We do have decreasing buy volume, which isn't awesome, but it could just be consolidating for another strong push to the upside. So on the daily, it looks pretty strong. This candle was a little bit worrying that the bears would come in because it was pretty bearish. We saw the price come up, but then it slammed right back down below the open of the candle, which is definitely a little bit of a signal of bulls in the market. But soon after, we got that massive bullish engulfing candle, really signifying that strength, seeing a lot of buy pressure come into the market compared to the bearish moves and the bearish candles that we saw for the 3 days there for the bears. But overall, looks really strong. Broken resistance, new level of support potentially. And then let's move on to Gemini, which is our other daily chart. And we do see that the bulls have just taken strength even further. Now, this is a little bit worrying because previously on the CME futures, we do like to play gaps, which I've talked about before. So if this pushes up quite a bit without the CME futures being open to capture that data, we could see a gap, which could potentially mean that we could get a bit of a pullback to fill that gap at some point in time. But overall, this does look very bullish. Previous level of resistance, we did get that nice bullish candle there with the wick to the downside, and then pushing well above the open of the candle, really showing strength there. We do see more bullish volume compared to bearish volume, although there's not a whole lot of volume coming into the market right now. But we just look at the horizontal zones for a minute. It is just such a strong zone within the chart that we really laid out well in 2019. So basically at the middle of June, that's when we first really hit that zone, which is right here. And then we initially hit it for a strong level of resistance, and then we rejected off that zone initially for the first time, and the second time, and the third time, holding that zone very well. And then the fourth time, fifth time, and then sixth time right here with the wick. and then once we fell below, it just absolutely plummeted, and then we didn't get any pullback, absolutely nothing. So we needed to validate that zone as a new level of resistance, and that's exactly what we did. We saw a massive move. This was a fake out breaking level of support. We did not get a hold on the retest, so that did not confirm that there was sellers within the market, but we got a massive push to the upside, and then coming basically right to the previous level of support. They're validating it as a new level of resistance with the candle closure basically right at that level in confluence with this descending zone, which is a little less defined because it was a potential one was right down here, but it was holding these lows there. So there was a potential there for a move to the upside, but inevitably it did break this level of support, and then we used it as a new level of resistance to short to the move to the downside, which we captured pretty well. So overall, because we broke that zone, does signify that there is strength within the market. The bulls are strong in the move. We don't see a tremendous amount of buy volume, but overall, we broke this zone. We're holding it on the daily chart, which is great to see. We've held it for 2 days now. This is our 3rd day that we've held this zone. So that just really shows me that the bulls are present, pushing the market back up. So now let's go to the 4-hour, where we can dissect the chart a little bit more. And let's just break it down on the 4-hour here. So let's get this picture right here. So this was the cup and handle where we had the cup, and then this was the handle where we see the support get held 1, 2, 3, 4 times, with the 4th time really holding that support, really showing us that the bulls are not going to let it go down. We see initially a bearish candle close bearish, but the bulls did push it up basically halfway down, halfway back up to where it opened, and then we did see a bullish pin bar, and then we saw the bulls get rejected initially at that zone by the bears, and then we did see the initiation for the second injection of buy volume, and then once we closed kind of above this gray area, we got a tremendous amount of bullish movement towards the upside, breaking our previous level of resistance and then validating it as a new level of support here. Very nice on the 4-hour there, and then we moved up again, hitting a new high. Previous level of resistance equals new level of support, and then now we have a new level of resistance that we are now seeing the price respect at this current zone, which is really good to see. And let's break that down on the 1-hour chart. So basically we're breaking resistances, holding supports, and it's looking really good. So now bringing trend lines into it, this was a zone that we talked about in the previous Bitcoin market update, and then we connected the higher lows there, potentially creating a nice ascending triangle. We saw a horizontal resistance right here. This is the apex, so it was pretty close. It did break to the downside, but we were definitely not looking to short. There was a horizontal resistance turning into a new level of support that got held there, so we were very patient. We did not enter short or anything, and we saw that price hold this level of support, and then we looked to long on the alts. So the price held that zone, broke this level of resistance after pushing back up to the highs, and then we had a nice little push, a pullback, and then a push again, making new highs. Not really seeing any crazy move to the upside, and actually seeing a little bit more sell pressure than buy pressure overall, which is not ideal. But we will talk about the other tools that we use within the tool belt, I guess you could say, in order to assess the market, to see how the supply and demand is, because that is what truly matters in the market, and that's how the price moves, is the supply and demand that's currently within any asset or sector or really any market. So now that we've discussed really everything from the monthly down to the hourly, let's just talk about different scenarios here. So let's just delete this because that is no longer relevant. We are basically just broken out fresh of a new consolidation. I do see some highs or lower highs I could connect. Let's just potentially see what we have here. Oops. So initially, I do see a potential ascending trend line like so. We have two A touch points right there, with the anchor point being a B, and then you have a type B right there, and then it broke out. Let's just make that. And then we can have another one that just connects. Oops, that's not the one I want. And then we could have potentially another one that just connects these lows here. So this potential situation here. So overall, we are seeing the price make an uptrend. So we are looking for potential lows that the price could hold supports on. But I'm not really looking to short at this market at all. I'm looking to long. I am bullish on the overall price action. Even if we do get pullbacks, I'm looking at supports and seeing if they will hold. Obviously, if we get a major correction in the market, if we, for example, break the $90-$200 support, that would definitely signify some level of strength from the bears. And then I do have one final ascending trend line there that will create the the outline of my trend. So if the price breaks below this zone, I'm going to assume that we could be potentially seeing a more short bias, and if some price break support, hold resistance, making lower highs and lower lows, I might be looking to short to see some downside exposure, because we could be retesting our demand zone of around $7,800 again. So then that could be a potential move of like over 10%. So that's definitely worth taking. So that's the only situation where I will look to short. I want to see a confirmation of a shift in trend before I look to actually change my bias. I'm not trying to find the perfect top to short. You could get blown through the roof so easily. Where are you setting your stop loss? Some determined range all the way out over here. I'd rather just trade with the trend until it's really signifying that it's now moving towards the downside, and it'll show you'll see the lower highs, lower lows, breaking supports, holding resistances, seeing those bearish moves to the downside. And you can kind of tell between a consolidation and then a potential actual break to the downside, because you'll see these highs that we are forming right here, and the price is not breaking the major highs. And getting a little bit away from minor zones, the key thing we got to look is for major zones. And we talk about major zones being the major daily candle and weekly candle, time frame, horizontal areas of supply and demand. And yes, those are our major zones, and we use horizontal dotted lines, which represent the supply zone, which is red, the demand zone, which is green, and then the white is the mid-range zone, which is both a support and resistance. And obviously, these demand and supply zones are just support and resistance. They're just zones of sensitivity, basically. So that is the overall analysis for BTC, and then we'll now cover the tools that we use in order to analyze the supply and demand, which initially is going to be the BTC longs. This is just on Bitfinex. This is going to provide a visual representation of what we will be covering in the next part of the video, which is going to be looking at multiple exchanges, seeing that short versus long ratio, that percentage on different exchanges. But this is going to be just on Bitfinex because I visually like to learn, and this chart obviously represents something that I can easily understand instead of seeing a price or a percentage day by day. So initially we've been talking about it for a while. We see this key level of a resistance. We see a major breakout. This is around the same time we broke out of that reverse head and shoulders, and also at the confluence of the descending resistance that was very significant. Let's just quickly just like this zone basically right here. This is a reverse head and shoulders, looking at it from the daily. Very easy to reverse head and shoulders here. And then this was also in confluence with the descending trend line that we've been holding for a while. Reverse head and shoulders, descending trend line. So around here we see this was December or basically start of the new year. And then looking at the BTC longs, start of the new year. So we were already breaking out. People were anticipating the breakout before the move actually occurred. So it was pre-breakout, which is a little bit surprising. But overall, we started seeing that buy volume come in, the accumulation phase of the reverse head and shoulders, holding that nice floor of the market, seeing the buyers hold the price instead of distribute it in the market, not trying to hold it. And then once the breakout came, a lot of people started making money, potentially adding to the positions. The short sellers quickly lost confidence in their positions, tried to get out. Short squeezes occurred. The price moved to the upside significantly, and the market did sell off a little bit. Well, it was a consolidation in terms of the daily chart. We did see a major sell-off in the amount of people who actually held BTC for that long period. So a lot of people did sell basically at the top, and a new wave of buyers came into the market instead of everyone just holding, because then you wouldn't see that major sell side move on this chart. And then we held the previous resistance as a new level of support with a nice double bottom, breaking the previous resistance and then retesting it almost, or it looks like, as a new level of support, and then blasting off, making new higher highs, really showing the volatility and the market emotions, seeing a lot more movement compared to the previous basically couple years. It looks like 2019 definitely was a year of consolidation, mainly where a lot of market swings were stuck in between ranges, and then 2018 was as well, just seeing the market fluctuate back and forth in tight little ranges, whereas basically 2020 has seen massive extensions both to the upside and to the downside. So then the next and final not chart, but the tool that we're going to be using is the Coin Farm online index, which shows the volume as well as the short, long positions opened in a 24-hour time and a 1-hour time. On what we're going to be looking at is 3 main exchanges: BitMEX, Binance, and Bybit. And this is it right here. Let's just take a picture and then talk about it for one more moment, and then we will be done our analysis. So BitMEX is going to be the main exchange we're going to be looking at because it has significantly higher volume than every other exchange, and with higher volume, obviously it has higher potential to shift the price. Just makes sense. And then Binance is the second, and then Bybit is the third. So right now on the 24-hour long versus short, so this is the total time in the 24-hour period that has occurred for the people that have longed versus the people that have shorted. Just comparing them in a percentage, we see that BitMEX, we see that there is 51.7% of people that have long, that have taken a position to hope in price appreciation, whereas only 48.3% of people are looking to short, hopefully seeing the price go down. And on Binance, we see that there is 50.68% of people that are long, and then 49.3% of people that are short. So not a huge discrepancy. Bybit has 51% on the dot of people that are long, where there's only 49% of people that are short. Not a huge discrepancy overall on the daily chart, or the daily time frame, or the 24-hour time frame, I should say. And then on the 1 hour, we do see a little bit more discrepancy towards the buy side. The bulls definitely seem to have confidence. We see that on BitMEX, there's 62.57% of people that are long, expecting the price will move up in the short term, and then there is only 37.4% of people that are short on BitMEX, which is a pretty significant discrepancy of potential move to the upside, because there are going to be more people making money when the move is going up, potentially adding more. Shorts are going to lose confidence even greater because it's just breaking resistances and breaking resistances. You don't want to basically stand in front of a train. And then on Binance, we see that there is 53% of people that think that the price will go up long, and there's only 46.8% of people that are thinking that the price will go down shorting. And then on Bybit, a bit more of a discrepancy, with 55% of people that think that the price is going to go up longing, and there's only 44.5% of people that are short. So overall, it does look definitely more bullish on 24-hour and hour time frames. overall, we do want to be mindful of key levels within the chart, some minor levels of support, but we are breaking to new highs very often. We're seeing higher highs and higher lows. I've said it time and time again. If the trend is continuing, just keep with it. All these indicators telling you exactly what the top is, using divergences, and yes, they sometimes do work if you're in confluence with the key level of resistance. Don't get me wrong, but price action is king. I do completely think that true. So I hope this analysis has helped you. If you have a question about anything we're doing in terms of the Performante Premium, which is a subscription service that allows us to mentor you one-on-one. We have books, we have videos, and you'll basically learn exactly how we trade and how we view the markets in order to capitalize on the volatility within the crypto space. So we trade alts, we trade BTC, we trade anything that has decent liquidity, that will move, that will also be able to get us in and out of the markets without any issues whatsoever. So if you have any questions, definitely check out the Discord. The link will be within the comments in this video. It is a free community where you can talk to individuals who are interested in crypto stocks, forex, entrepreneurial endeavors, all that stuff. If you found this video interesting, you'll definitely have a good time in there, and there is some pretty cool, interesting individuals there that you can talk to. So I hope you enjoyed it, and until next time, have a good one and enjoy the rest of the weekend.